Hello, everybody. Welcome back to the Wild Wolf Financial Team. This is Jem, your daily analyst in gold. Today is the second trading day of the week. Yes, it is Tuesday, December the 22nd. Just before I move on to what's happening on this week's trading, let's first have a quick recap in what's happened on the previous week. So as we can see now, we have seen a very strong bullish momentum on this area here. And we have come across an overnight corrective pullback. So this is the triangle you can see right here. Now, generally on pullbacks, this is a good opportunity and giving buyers a signal. So this triggers a good time to place a trade in going long. Now, moving on, we have seen that here we've seen a strong retracement. And nonetheless, even though there was no market moving data, in fact, no market moving economic data, we still have seen a strong sell off here that prices have plunged down. So even though it was a very slow day, we did come across the situation where a lot of big players got involved, trying to drag prices back into its previous range. Now, this area we can see here had a strong plunge of 50 points, so that is a significant drop in a very short period of time. Now, this week's opening, as I mentioned in my previous videos, has opened in a positive gap. So we have seen a 45 pips difference here. This is where I'm showing. You can see that. Now, after the drop, gold has entered a consolidating zone. So we can see that prices were trading sideways. So there were small fluctuations on a sideways pattern. Now, this was right after the sharp drop. So let's get on with today's topic. Today's topic is that gold consolidates after a rebound from $1,855 an ounce. So the spot gold rebounds into correction, as I mentioned just previously, after Monday's sharp drop. So we can see that after the sharp drop, gold has consolidated horizontally in this area. And moving on, the current resistance level is on $1910, while the support is sitting on $1850. Now, gold prices hover around 1880 during Tuesday's Asian session, recovering from previous day's losses while keeping bounce off 1855. So as I mentioned earlier on, we've seen the price range of how the prices have fluctuated. So it has entered the $10 range. So, although optimism concerning the US coronavirus stimulus and the new variant of the virus does favor the bulls, uncertainty over Brexit and a light calendar is to keep the gold bears hopeful. Now, with Brexit and no major updates on the COVID-19, mixed signals sends traders directionless, because as we can see here too, after a sharp drop, prices were consolidating, and with the way the market's moving from this area, as you can see, it has sent mixed signals, because on the previous day, which was December 16th, was one of the most important days on the economic calendar. Now, at this situation, the market did not respect the data. So we were expecting stronger fluctuations, but nonetheless, we didn't experience that. Now, one of the main reasons for the negative impact on the US dollar at this point in time is the stimulus deal. So the $900 billion US stimulus deal is one of the largest economic relief bills in the US history, second only to the $2.2 trillion CARES Act that took place in March this year. As we all know of what happened with the global downturn from this pandemic era, we have come across the situation where it's affected the global economy. And not only the economy, but most importantly, public health. So, the current consolidating movement may form into a pattern, but yet it is still too early to tell because, as we can see, a pattern was being formed here, and many traders did try to place orders, but based on technical analysis, you have to be very careful in placing the order at the right time. So, nonetheless, if a rebound now does occur, this could be a good opportunity to enter the market by going long. So if you do expect a rebound in this area, prices may, or when the prices do have a rebound here, we will expect a price to go up, and this will be a good signal to go long. Now, moving on, based on the economic calendar today, the final GDP, which will be announced shortly later today, this is something that should be eyed on, as it is the broadcast measure of economic activity and the primary gauge of the economy's health. So basically, if the actual figure is greater than forecasted, this will be good for the US dollar. But if the actual figure is lower than forecasted, we may expect the dollar to support gold. So at this point in time, we will see gold prices go up to a new level because currently it is consolidating in this zone. Now the next level would be to cross 1883. So if I get it more clear, this will be the price after it breaks this level, and once it does break this level, we are expecting the next level to be at 1905. So let's just go back. Now, it was only a month ago on November 9th. So if I do go back on my charts, let's go back to November 9th. And as we can see here, with the way prices are fluctuating, now gold did touch lower highs of 1965, and after the announcement of the COVID-19 vaccine, we did see a plunge of $100. So, as we can see here, from this area, prices were on the highs of 1965. At this area, it was 19, sorry, one moment. Yes. So prices did plunge $100 from 1965, and ever since prices were on a more descending trend. So it was more of a downtrend. As I've mentioned in my previous videos of the Pfizer vaccine announcements of 90%, and then the other companies like Moderna also announced 94.5%, with finally Pfizer announcing 95%. Now this gave hope to the public and the economy basically. So prices have dropped to lows of 17 and below 717. So ever since there was a strong rebound in prices trying to go back to this level here. So as we can see now on today's chart, so the resistance level is at 1910, whereas the support level is sitting at $1850 an ounce. Now, prices at the moment are still on a rising trend, but on the daily chart, we can see that it is showing in a more bearish movement. Now, with the way gold is moving, we always advise our investors and all our traders, please do wait for our signal. And this is something we announce either on a daily basis, if and only when we find the right time to enter the market. So please do stay tuned. And just before I end my show, I would like to thank all all of you for watching my video. And please do not forget to hit the like button and subscribe to our channel so we can keep you updated on a daily basis. So meanwhile, I'm wishing you all a great day ahead.